Hello traders, welcome back to the channel. We are trying to make this with a level of clarity. Today is Sunday, and Sundays, as we know, we do top-down analysis and give buyers on what to expect in the market. And today we have few pairs that will be running top-down analysis, and today we are going to combine our analysis with our DSY, which simply means dollar index, because this is what we use to identify the strength and weakness of dollar. And today will also be having Nasdaq as part of our analysis. So stay with us to the end of this video, because at the end of this video, you maximize your chance of winning in the forex market. Without wasting time, let's begin. First of all, I would like to say congratulations to some of our viewers, the people that utilized this opportunity that was shared in my previous video. And I believe if you are taking this trade, you must have closed your trading profits. Today, before we proceed, I would like to clear everything we are seeing on the charts so that we can have a very good analysis, as this is the first analysis we are having for the year. Today we are starting from monthly because this is top-down analysis. Is really going to help us to understand what is currently happening in the market. This is our monthly charts, and as you can see, dollar has been in a very bullish movement, USDJPY, and whenever the market is in a very bullish movement like this, so what do? You start looking for more opportunity to take the market today upside, and that's exactly what we are going to be looking at. But I want us to see something, to take note of something, because that's the essence of top-down analysis, because higher time frame gives us the direction of the market, and lower time frame gives us what entry and very good area of points of interest. So we can see that this market is covering every gap left apart from the gap we are seeing at this particular place. And if this is your first time of being in this channel, I want you to know, right? Markets always balance each movement. Whenever we have imbalance or a liquidity pool, markets always go up and come back to take it out before more continuation to the upside, which we are going to look into deeper as we proceed. Now, we can only identify this place on monthly as only open price range. When we move down to weekly, but before we do that, I want you to take note of something. As you can see, the market is in a very strong area of resistance, which is giving us this confluence of what we are expecting. And I want you to look at something at this particular place, right? When you look at USDJPY, you can see that whenever the market finish printing three candles at its goal, 1, 2, 3, the other opposite candle will appear. When you look at this 1, 2, 3, other opposite candle, 1, 2, 3, other opposite candle, and 1, 2, 3, 4 other opposite candle. That is why it is good for you to always study the behavior of any currency pair you are trading before your analysis. Now we have that 1, 2, 3, 4 candle, and as you can see, the strength of this candle has really depreciated, which means this is giving us more confluence why we could be expecting some opposite candle appearing this month. And also considering that we are on already very strong power or area of resistance that move this market from this particular place to this particular place. So having that in mind, let's move down to weekly. Now, on weekly time frame, we can see that the market is still creating series of higher highs and higher lows. And during the creation of these higher highs and higher lows, we can see how USDJPY has stylishly closed every gap left. Even when this particular gap was left at this particular place, USDJPY came down with this week. Let's just zoom for us to see it better. USDJPY came back with this week and swept this liquidity, closed this gap before more continuation to the upside. Remember, this is the particular zone that we have that gap on monthly. Now, moving to daily time frame, we can see that USDJPY has been covering every gap left behind, including this gap when it was left behind at this particular place. What happened? USDJPY has retraced back to cover all these gaps, showing more strength to the upside. Despite we are in a very strong area of resistance, right? But from the reaction we are having, we are still having series of higher highs and higher lows. Considering what the market is still going to give to us to see if we are going to expect that down movement on this January, but we move as how market moves. Remember, trading is reactive and not predictive. So having all this in mind right now, let's move down to 4 hours. But before we do that, please study the behavior of what we are seeing right now. As you can see, when we had these um gaps left, right? All these gaps we are seeing at this particular place, USDJPY came down and covered it. Then when we had this particular gap at this particular place, as you can see, right? USDJPY came down and covered it. As it stands right now on daily, we don't have any current gap left to be covered. Even this particular last gap that was covered before that massive retracement, as you can see, it was covered. So we don't have any gap left to be covered right now. That is giving us more confidence why the market has to continue moving to the upside. And from daily perspective, as we can see how this market has gone and closed above this area of resistance. Remember, we are doing this deep top-down analysis because this is the first week of the month and also the first week of the year. So we need to do this so that you will know exactly what you are expecting, because this 2026, I really want to see everybody successful in the forex market. So without wasting time, let's proceed. Now, when we move to 4 hours, let's quickly delete this. When we move to 4 hours, we can see what is currently happening in the market. And you can see how USDJPY has been closing every gap left aside this gap. We have a very good fair value gap there. And definitely we are going to look for that liquidity resting above it. So this is a very good fair value gap that we have at this particular place, right? And this is a sign, this is going to serve as a magnet to attract the price. Now, let's quickly delete this. Remember, this is a very strong area of resistance, right? Remember, resistance turn to support. So let's delete this while we have that in mind. And when we look at this, we have a very good area of resistance also, sorry, with a very good fair value gap. As you can see, we have that fair value gap here. Look at it. And we have something like order block, which we are going to look for in lower time frame. So since we have this, right, we are now going to look at what the market is really going to show us. Now on 4 hours, despite we are seeing all this move to the upside, we can see that on 4 hours, we have this particular order block below here. And if you have been following us on this channel, you can remember that whenever we have a market, right, going up and a low created a high without sweeping any liquidity, sooner or later market will come back and take out that liquidity before continuation to the upside. And when we look at it right now, we can see that this market created this higher high at this particular place, right, without this low created sweeping any internal structure before that break to the upside. This is a value break of structure. Why? Because this low swept this internal liquidity before this break of structure. So this is a very valid break of structure. So this low could now be used as a liquidity, right? So that is why we still have to put this place in mind despite what the market is doing. And when we look at it for trend traders, you can see that this market right now has given us much liquidity support that the market could decide to take out come to this particular place, taking out all these internal structures before continuation to the upside. So having this in mind on USDJPY, right, because of the things we have here that we're expecting to happen, remember, trading is reactive and not predictive. Our first point of interest here is going to be at this particular place. Our stop loss just below this low. Remember, if you've been on this channel for some time, whenever you have any other block and the other block has wicks below it, you treat all of them as one. So here is my first entry point of interest, my take profits. Remember, 3-to-1 risk reward, and you can target more higher to the upside. Now, but let's bring it down. 3-to-1 risk reward is more than okay in the market. So let's proceed. So having this in mind right now, let's quickly look at what is currently happening at the top side of the chart. Now, we are going to move over to the 1 hour. Remember, monthly, weekly, daily, all are showing us that the market is moving to the upside. And whenever you have price action like this and the lower time frame is giving you otherwise, that is when you start, right, looking at what to expect in the market, either to wait or start looking for opposite direction. But right now, as you can see, right from higher time frame, it is giving us buy signal. So we will keep looking for opportunity to the upside. Now remember, we have this as a point of interest, and we also have this as a point of interest. Now let's analyze what is currently happening at this particular place. Now, as you can see, this low we are seeing here, right, after this low took this internal liquidity, right, I will suggest you go through my previous video so that you can understand the difference between internal and external liquidity. Sorry, major and minor inducement or liquidity. So before this market broke this structure to the upside, before it broke this structure to the upside, right, this is a valid break of structure. Before breaking this structure to the upside, right, the market swept this liquidity and created this low that we have at this particular place, right? And just like I said a few minutes ago, that whenever you have a market moving to the upside, creating series of higher highs and higher low, later the market created the low, and after creating a low without sweeping any liquidity, created high, later market will come back and take out that low before creating a new higher high. And that is exactly what the market has done. The market created this break of structure, created this low here as a liquidity, right? After creating this low as a liquidity, let's identify that as a liquidity. What happened? The market later came back, taking out all this internal structure as liquidity, coming to this other block, right, before more continuation to the upside, giving us this another break of structure. So currently right now, what is our trading range? Our trading range, let's quickly delete this. We are coming to it. Our trading range right now is just between this low, right? Why? Because that low swept liquidity, this low and this high. This is our trading range for the week. So since we have this right now as our trading range, what do we expect, or what are we expecting? We start looking for areas that the price of the market could be attracted to. Now, when we look at this, we can see that this market, after sweeping liquidity, the character was changed at this particular place, and this market created this low as a low internally before this break of structure. So what are we expecting? We are expecting the market to clear this internal structure, coming to this other block that we have at this particular place, or order flow, right, before more continuation to the upside. And when we look at it right now, we can see that fair value gap at this particular place, which could attract the market. So when we look at it here this way, when we get to 15 minutes, we can see that those lows created are much visible on 15 minutes, as you can see, right? These are lows created without sweeping any liquidity, so there is possibility for the market to come down, right, to trigger all these internal inducement or internal liquidity before more continuation to the upside, considering that right now we have these three equal highs, right? And whenever markets have three equal highs or equal lows, markets always come for it. So our second point of interest is going to be just at this particular what place. Our stop loss just below this low, right? Or to be more safer, you put it below this low, right? Then our take profits is going to be 3-1 risk reward, right? Remember, don't be greedy in the market. 3-1 risk reward, which is targeting this external liquidity, right? So on USDJPY, these are the setups that we are looking at in this trading week. The first one is what's happening. Okay, the first one is this, right? Let's quickly. The first point of interest that we have is this. Then the second one is this. Then, but if the markets open and continue moving to the upside, we still don't have anything to worry about. On Wednesday, we are still going to update you on what to expect. So on USDJPY, these are our points of interest. So I think I have another setup on gold. Right, on gold. But before we come to gold, let's quickly look at GBPUSD to see what we have at that particular place. Okay, let's quickly go to, okay, let's delete everything that we have at that particular place. Okay, let's delete everything so that we can have that top-down analysis. So let's go to weekly, or more, let's start from monthly. Okay. On monthly, remember this is top-down analysis, so we are going to be starting on monthly on most of our analysis. Then on monthly, we can see that okay, let's zoom out. Let's see. Okay, on monthly, we can see that the market is moving quite aggressively to the upside, right? After testing this area of support, creating a head and shoulder pattern for pattern traders. As you can see, this happen to be our left shoulder, this is our right shoulder, and this is our head. This is for pattern trader, and this is one of the very strong reversal pattern. So since we have seen this and the market is already moving to the upside, what are we to expect on GBP USD? On GBP USD right now, since we have seen that the market is moving to the upside, and we can see boldly, let's zoom out a little. We can see boldly that this is a gap left on USD, GBP USD, and the market has already come down and filled it. And as you can see, we don't have any gap left on monthly charts or monthly time frame to be filled. Let's quickly zoom a little for you to see what we are talking about. As you can see, the market came down, right, with this covering all the gap left, and the market has resumed moving to the upside. So currently right now, GBPUSD is moving to the upside. And when you take your Fibonacci level and check the retracement level, you can see how GBPUSD has retraced to between 0.3 and 0.5 Fibonacci level, giving us more confidence why we should be looking for more continuation to the upside. So having seen all this right now, we are now going to focus on what is currently happening at this particular place, because that is what is going to give us clue on what to expect in this new trading week. So when we look at this, we can see that we have only one gap left at this particular place, which we could see the market coming back to fill. Now, when we get to weekly, what do we have there? Now, on weekly, we can see that GBPUSD is closing every gap left. As you can see, we had this gap left at this particular plate. GBPUSD used that week and covered that gap before continuation to the upside. And we can see same happening here, except at this particular place where we have this unmitigated zone where GBPUSD is here to what? Fill. So having seen that, and we can see how GBPUSD has already broken this area of resistance and the market is currently testing it. And we are going to now move over to lower time frame to see exactly what is happening. Now, when we get to daily, we can see that on daily, we can see that on daily, the market is now really testing a very strong area of resistance. But before we look at that, let's quickly identify this or look at this place that we saw on weekly. Remember, on weekly, this is the only gap that is left to be filled. Then when we get to on daily, we can see that this market is still creating series of higher highs and higher lows. And we are looking at this market to come to this other block or this fair value gap that we are seeing just at this particular place, giving more room for this market to continue moving to the upside. Why? Because this happens to be our strong high that swept this internal liquidity. By the way, I covered GBPUSD when the market was at this particular place, explaining all the reasons why we should be expecting this move to the downside. And when the market got to this particular place, I explained all the reasons why we should expect the market to move to the upside. Why? Because when you look at it, when the market was coming to the downside, it created some internal structures that needed to be what? Taken out. And currently, that is what GBP USD is doing. Remember, whenever you have a market moving to the downside and creating these internal structures, right? Whenever the market wants to have any deep retracement, it will take out all these internal structures, right? Coming to fair value gap or other block before continuation to the downside, and that is exactly what GBPUSD is doing. GBPUSD is trying to take out all these internal structures. It has already taken this one, taken this one, taking this one, and currently was trying to take this one to come and fill this imbalance and fair value gap that we are seeing at this particular what place. So this is opening more room for us to see more continuation today upside. So currently, the market is still creating series of higher highs and higher lows. And as you can see, we can see how we have that inversion of trend, creating series of lower lows and lower highs to now creating higher highs and higher lows, moving to the upside. So having said that right now, we can see now that in this particular place, we are not expecting market to come back to it now. Why? Because the market had already broken this structure and tested it with this week, and the market had also broken this particular structure, tested it here, and the market has already broken this structure and currently testing it. So this is where we are going to be looking for more opportunity to start taking the market today upside. So having said that, let's clear our charts a little to have more clear analysis. So currently right now, we are going to be focusing on this particular place based on the price action the market is giving to us. Remember, trading is reactive and not predictive. So when we move to lower time frame, 4 hours right now, by the way, I covered this move on GBPUSD when the market was at this particular place. I explained all the reasons why we should be expecting this market to come to the downside. To cover all these fair value gaps that we are seeing here, I recommend you go to my previous video because through it, you will learn a lot. So seeing this right now, what do we have here? Let's move to 1 hour time frame. Now, when we look at this, I covered this move that we we are seeing to the downside. Why? Because GBPUSD swept this internal liquidity at this particular place, right? Before breaking this particular structure, as we can see, right? Now, after the break of structure, the GBPUSD created this internal, this low that didn't sweep any liquidity before breaking this structure to the upside. And remember, whenever a structure is broken without that low sweeping liquidity, markets always go back to take out that low that didn't sweep liquidity before break of structure, before we start seeing more continuation to the upside. And GBPUSD has used this low as a liquidity sweep. Now we are now expecting more continuation to the upside, considering that this liquidity has been taken out. Now let's go back to 4 hours. Now on 4 hours, we can see how, okay, let's go to daily to cover something there. We can see how the market has used this long week to close all the fair value gaps that we are seeing at this particular place. So, and this is a very strong area of resistance that is now trying to turn to support. So when we return to 4 hours, we can see that the market reacted from this order block and order flow that we are seeing just at this particular place. Let's quickly go to 1 hour. Let's see that. Then you can see it. This is a very strong order flow, and I recommend you go to my previous video. I've covered this order flow and order block, the difference. So right now, what are we expecting? On GBPUSD right now, since the market is reacting from at a very strong area of resistance, and we can see what our higher time frame is already showing to us. So we are going to go to lower time frame and lower to see how we can get that good entry. So when we get to 30 minutes, let's see. And on my previous video, I explained all the reason. I think the video was uploaded on Friday. I explained all the reasons why we should be expecting this low to be taken out, and currently market has taken it out, right? And before creating this higher high, we are seeing at this particular place. So this is a very good break of structure. So let's quickly go to lower time frame to see what is happening at that particular place. Right. Okay. Currently, because of the kind of price action that we have just at this particular place, because we don't have any valid order block at this particular place again, because the only one we have has already been mitigated. So let's look at, okay, we have a very good order block just below here, right? We have a very good order block just below here, and we have a very good order block again just below here. When you look at it, let's quickly zoom a little at this particular place. You can see that we have that fair value gap just at this particular place, and we have fair value gap at this particular place. Remember, if you have been on this channel for some time, any order block with fair value gap, it makes the order block very, very strong. So on GBP USD, we are going to be looking at that particular order or opportunity just at this particular place, right? Since we have another order block here, so we are going to look for that opportunity at this particular place. Our stop loss coming below this particular low, right? Remember, trading is reactive and not predictive. Always wait for a change of trend before taking your trade. So we are going to be targeting 3-to-1 risk reward. Remember, don't be greedy in the market. 3-to-1 risk reward is very, very much okay in the forex market. So on GBPUSD, this is what I will be expecting in this new trading week. And if the market continue going to the downside, you still have nothing to worry about. I will still cover and tell you what to expect in the market on the one is there. So couple with what we are seeing on our DSY. So let's quickly go to our DSY. We can see that on our DSY, right, the market is currently moving, still creating series of lower lows and lower highs, despite it is reacting on a very strong area of support. When we get to daily time frame, or let's go to weekly, we can see that our DSY, right, is currently reacting as a very strong area of order block. But when we get to monthly, let's see something. On monthly, we can see that we have a open order block here that the market could continue coming to before we start seeing more continuation today upside. Considering what we are seeing at this particular place, as you can see, our DSY is in a very bullish movement. And since the creation of this break of structure, right, external break of structure, the market has come down to take out all the internal structures created before more continuation to the upside. And we have some structures created below. So the market could decide to come more down to this particular place because the price action that we are getting just at this particular place is yet to be defined. So the market could decide to come more down to take out this particular low, right? Which is also part of internal structure before more continuation to the upside, considering that we have this other this fair value gap here. So the market could decide to come down to take out those liquidity before more continuation to the upside. So it could make the dollar to be weak just for some time, because whenever you see DSY weak, going down, dollar to all pairs will be weak. Whenever you see it moving to the upside, dollar to all pairs will be strong. For example, as you can see, this happened to be on Friday 21st November 2025. That is when DSY started coming down. Then when we go to GBPUSD during this time, you can see that GBPUSD started moving to the upside, showing you that whenever DSY is moving to the downside, that is when dollar against all currency pair will be what? Strong. Other currency pair will be buying against dollar. So currently, this DSY is reacting from a very strong area of support and order block, but currently it is still creating series of lower lows and some lower highs. So currently, since we are still seeing these lower lows and lower highs, there is no way for us to start looking for more opportunity to the upside until we see the market closing above this. Immediately we see the market close above this, then we can start looking for more continuation to the upside, because this is the high that swept the liquidity that created this lower low, right? Before all this move to the downside. So this is a very strong high. Once we see market closing above this, then we know that USDT has returned to be very strong, and we start looking for more opportunity today upside. And considering what we are seeing at this particular place, right, we have that order block at this particular place, and this could attract the market because we have those fair value gap here. The market could decide start selling on DSY just from this particular place to the downside, right? Which is going to make dollar to be weak, confirming what we already seen on GBP USD. So when you want to make your analysis, you can go to your DSY, right? Combine, see what is happening on the DSY before making your analysis. It's really gonna be helping you as a trader. So on GBP USD, this is what we are expecting to happen. These are our point of interest. And if the market decides to do otherwise, coming down to the downside to come and close all this fair value gap, we still don't have anything to worry about. On Wednesday, we are still going to cover and tell you what to expect. So on USDJPY, this is our setups. And as you can see, the thing what we are seeing here is also corresponding with our DSY, showing that USD will be weaker against JPY for some time before we start seeing that buy, which is also tallying with what you are seeing on GBPUSD. So next setup that we have is on gold. Now let's delete everything here. Now on gold, let's quickly start from monthly. As you can see on gold, on monthly, gold has been moving to the upside, as you can see. And on gold, we don't have any place that we can call any level of resistance until gold gives us that particular zone. But gold is trying much as it can to create that resistance. But currently, we don't have any resistance level, but we can see that we are seeing some signs of weakness. Let's zoom very well. Let's close this. We can see that sign of weakness, rejections above. But having said that, let's go to lower time frame to see what we have. And as you can see, the only valid fair value gap we have is what we are seeing at this particular place and this other block we are seeing at that particular place. So having this in mind, let's move down to weekly. Now on weekly, we can see how gold has already broken today upside. Remember, I covered all this move on gold from this particular place when the market was here. I explained all the reasons why we should be expecting more continuation to the upside. I recommend you go through my previous video because through it, you can learn a lot. And by the way, before we proceed, if you have not subscribed to this channel, subscribe, share, like, and comment because your subscription, like, and comment motivates us to create more quality educational videos like this. And if you want a structured learning, one-on-one mentorship and guidance, our mentorship program is kicking off tomorrow, 5th January. So if you want to be part of it, you can check the comment section. You will see a link where you can talk to us one-on-one and book your slot. Without wasting time, let's proceed. Now on gold, we can see that gold had already broken this structure to the upside, right? Now, when we get to daily, we are going to see how everything is defined. But before that, we can see how gold is actually testing this area of structure because as you can see, gold broke to the upside, and after every break to the upside, this is what I tell some students in my community program, that every break of structure you see, no matter whatever the market is giving you above here, don't buy, because after every break of structure, market always come down to rest before more continuation. And this is what exactly gold is doing. So when we get to daily time frame, we can see how gold swept this internal liquidity, right? Coming to this other block before continuation to the upside. By the way, you can go through my previous video. I cover all this move to the upside on gold. So this is a valid break of structure now. Why? Because it swept liquidity before this break of structure. And we can see how gold always tests area of resistance after broken. As you can see, gold tested this resistance after broken. Resistance turned to support, and I covered the all the things that we are seeing here, explaining all the reason we should expecting gold to move to the upside. And when gold broke this structure to the upside, here also turned towards a support. Resistance turned to support before we start seeing this move to the upside. And currently we can see that gold has broken this resistance level to the upside. So what do you expect? We are expecting this right now to serve as what? Resistance that is going to turn to support, and that is exactly what gold is doing. So let's quickly clear everything for our chart to be clean. So currently, we are now going to focus on what is currently happening at this particular place to see how we can utilize the opportunity and keep taking the market to the upside. So currently, we can see that this particular area that is being tested, we can see that we have only one fair value gap there, which is this one that we have identified. And fair value gap makes any other block below to be very, very strong. Look at that fair value gap there. As you can see, gold has been covering every gap left till this particular what gap. So right now, let's identify that gap before moving to the lower time frame. And while looking at it, you can see how we have that strong order block at that particular place, right? So let's go to 4 hours. Now on 4 hours, everything is quite pretty defined now, as you can see. So we still have that valid fair value gap at that particular place. As you can see, that gap still need to be covered, right? So let's see what is currently happening there. So, and let's delete this. And this fair value gap, we can see order block, right? Or order flow just there. We can see that order block there. So we can take this to be here, and we still have some liquidity resting above it that the market could use as an inducement. So having this, so we are going to still be considering this particular place. This is going to be our first point of interest. Remember, trading is reactive and not predictive. So we are going to be looking for that opportunity first at this particular place, depending what the market is really going to give to us, right? Remember, 3 to 1 risk reward is more than okay. Then you can be targeting the highs today upside. That's one. Secondly, so let's look at what is currently happening at this particular place to see if we can utilize the opportunity. And let's go to 1 hour. Okay, on 1 hour right now, we can see how this market reacted from this order block at this particular place, right? That is why I always say this: whenever you see any order block with fair value gap, it makes it very strong. Look at that order block here, right? Look at that order block there, and we can see that clean fair value gap at that particular place. So the market reacted from that particular order block, right? Taking out this internal structure, right? So currently, taking out this low. So currently, the market is now kind of ranging at this particular what place, and this is the area the market is ranging. So let's delete this. We are not going to identify this as a very strong low. We are not expecting markets to go below. So let's quickly identify this with black. Yes. So we are now expecting this market not to go below this. So the markets, our trending range now is between here and this particular place. I know I'm taking my time to do this top-down analysis so that you can implement it in your own trading analysis to maximize your chance of winning. So currently, and we can see for pattern traders, we can see how this market is creating head and shoulder pattern, right? So we could see the market moving to the upside at this particular place. And if the market decide to come more down, right, to test the structure below, we can still look for that opportunity at this particular area of value. But currently, let's look at what is happening at this particular place. Until this market, right, break this structure to the upside, I'm not gonna be taking that particular trade, right? This is a very strong area of resistance. Why? When we move to the downside, to lower time frame, so let's quickly go there. We can see that this market right now, let's quickly delete this so that our chart will be more clear. We can see that we have that break of structure at this particular place, right? As we can see, break of structure. And which high broke that structure? This, right? But before that break of structure, the market created these areas of inducement, which we can call internal structures. And we can see how the market has taken those inducements or those structures as liquidity. As you can see, let's identify this. You can see how it has taken it as internal liquidity coming to this other block that we have at this particular place, right? Before coming to the downside. So currently, until this market goes above this and close above it, I will not be taking any buy to the upside. I will be expecting the market to come to this particular place before I start looking for any opportunity. But in a situation that we see this market right now closing above this, then I'll be looking for that retracement of and sweep of liquidity before taking that market to the upside. So currently, there is no opportunity that I can be looking at this particular place. And I'm not going to be taking this as a very strong area of support. Why? Because this place, this low did not sweep any liquidity, right? It has not swept any liquidity because this is a low created, and these are all equal lows. These are lows created before this move to the upside, and this move to the upside did not break any structure. So in this situation, I'll be waiting to see what the market is going to be doing on gold. And I'm not going to be looking for sell opportunity because sell opportunity is going to give me that counter trend. But if you see opportunity at this particular zone, because the market is giving us that reversal pattern of left shoulder, head, and right shoulder. But if you see a good opportunity, you can take the trade to the upside. But before that, let me quickly look at 15 minutes and lower to see if we are going to see opportunity there. Okay, at this particular place, let me see if we have any fair value gap left there. You can actually try taking the trade here, but it's very risky, right? If you must take this trade, maybe a week can come and trigger this entry. But currently, I don't think that I'll be taking this particular trade. I'm going to wait to see what the market is going to give to us. And if the market gives us a very good opportunity, then we are going to be taking that trade to the upside. Let's see. And currently, the market is here to close above this. So currently, I will not be taking any trade. So, but if you must take the trade, this is where you should be looking at, which is also very closer to that entry. You can be looking for that position at this particular place, right? Since the risk is very, very small, we can be looking for that entry at this particular place, right? To target to this 3 to 1 risk reward is okay, or you target the external liquidity. But this is a very risky trade. Wait for change of trend before taking this particular trade because it's very risky. So on gold, let's quickly go to 1 hour time frame. On gold, these are trading opportunities and points of interest that we are looking for. Then on GBPUSD, this is what we are expecting. Then on USDJPY, this is what we are expecting. Then I'll quickly just go through NASDAQ. Let's quickly see on daily. Okay. Okay, we are going to leave NASDAQ today. Let me see something. Okay. We are going to leave NASDAQ today while I cover it on Wednesday. So just stay tuned. On Wednesday, we are going to really cover NASDAQ, right? Because there are some certain things that I'm seeing here that is not defining everything on NASDAQ, right? So on Wednesday, we are going to cover NASDAQ. So these are the top-down analysis and bias we are giving for this week. till Wednesday. Whatever the market does, we are still going to update you all. Have a wonderful trading week. Remember, if you have not subscribed, subscribe, turn on the notification button, and share. It motivates us to create more quality free contents like this. And if you want one-on-one mentorship and guidance and support to take your trading to next level this 2026, our mentorship program is kicking off tomorrow, being 5th of January. So you can check the comment section, and you will see a link that will lead you to talk to us one-on-one and book your slot on for the mentorship program. To have a wonderful day, guys. Thank you.